is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 53, Nasdaq's up 9, S&Ps are down 6. We have the gold contract trading down $1.30 at 1305.50. Silver's down. Silver's up 23 cents, $16.27 an ounce. There's some divergence for us.
Sure.
Oil, we're going to have oil numbers this morning. Flat, 67.26. Notes and bonds, 10-year note up 2 ticks, 119.14. 30-year bond up 5 at 143.10. Statement this afternoon is going to rock and roll those bonds.
What are rates going to do? We'll find out.
No
that gold
doubt.
contract, silver, we'll get some volatility there for sure.
Big time. King dollar's up 170 ticks, 92.425. That's been on a little tear. Looks like it's going up to the next swing point. Maybe we'll get a spike when the statement comes out. You get the euro at 119.70 to 1 US dollar. The yen is at 109.93 to 1 US dollar. And guess what, folks? If Apple wasn't up right now, Apple is actually saving the Dow and the NASDAQ.
Okay.
And even though the Dow's down,
sure.
and Apple's only up $6.70.
Yeah.
It's pretty wild, man.
Yeah.
Big weighting in both of them,
for sure, yeah.
No doubt. Let's go to our man, Mr. Kevin Hinks at TD Ameritrade. And don't forget, folks, every trading day right here, you want to understand options upside down, strategies, futures. Kevin and his team, great program. Just go to TFNN.com. Better yet, just go to YouTube, put TFNN in the search bar, keep it on your phone, click it, subscribe. All the programs pop right up. See Kevin and his team out there getting us all these great strategies, and especially, you know.
You think they'll have anything to talk about today?
Oh, baby. Watch out. Watch out. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. The theme for today is underestimate Apple at your own peril.
Yeah.
Yeah.
Right? Because there was a lot of hesitation going into these earnings, and they put up some numbers. Here's my question, Tom. $267 billion in cash on hand.
Right.
How are they going to make payroll with such a small amount of money?
Well, you know what's amazing inside those numbers, too? They're talking about that they had already put aside $210 billion that they hadn't spent yet. They're going to spend this quarter for buyback, and they put another $100 billion. So you're going to buy back $310 billion.
Yeah, they already had those plans, right? And this is like additional $100
billion.
Yeah.
And then, you know, Kevin, you brought up the service yesterday. That service, that's
their revenue from services.
100 million new customers.
Is that what it was? Okay.
Paying for subscriptions.
Yeah.
That's in 90 days. I'm trying to figure out what they just did to get 100 and that's a lot of people, man.
Sure.
The services part of Apple's earnings is pretty impressive. And actually, if you go through all these numbers, Tom, everything did pretty well or close to expectations. Even the speaker beat expectations in terms of sales. Now, Apple's not first to market with a speaker. They're what, Tommy, third or fourth?
Oh, yeah, right.
To the market with one of these, and yet even though the sales of the speaker beat expectations. So it's just amazing to me. What it shows, I think, is people are comfortable in the Apple universe, right? And if it says Apple on it, that's what they want. They want to keep everything the same.
Yeah, I agree. Yeah, it is. And you know what?
I love my iPhone.
And there's gonna be more people. There's gonna be more phones. There's gonna be all
Everybody
of that.
loves to re-up their phone at least every 2-3 years, somewhere in that degree.
Right.
You're right, guys. But here's I think something that will kind of guide the future for Apple. The average selling price of $728 was a little lower than they expected.
Okay.
Right? They were looking for $742.
Okay.
So that's saying, right, the iPhone X and that $1,000 price on an iPhone X is hitting a little bit of elasticity of demand.
Yeah.
I call it. Where people are like, yeah, you know what? I'll buy a brand new iPhone 8 or one of the lower, and that's good enough for me.
That's
right
what I
now,
did.
Other than $1,000.
Tommy actually did
That's
that.
what I did. So exactly, Kevin. I
there you go, Tommy.
I bought the 8. It really wasn't worth it, and there was going to be a big line potentially for the 10, and there was just this hoopla, and I said, the 8's perfect, man. That's all I need.
There you have it.
Yeah.
Right there. That's America's youth, young adults.
The youth.
There.
I like that. There we go.
Look at me.
Totally.
Hey, you're
America's youth. I'm going to stick to that, Kevin. I'm America's youth. We're going with that. I'm going to remind Tom of that when that comes up.
But what I'm saying is that may guide Apple's production going forward, right? That says, all right, we're finding our sweet spot here on the price that phones, where demand starts to drop off and where demand stays strong might be around that $700 to $800 level.
No, I joke, but I completely agree. And I heard an analyst talking about this like a week or two ago, saying, their big moment's going to be when they come out with a phone like the 10. But they do it as the regular revamp, that it's the phone they're selling for $700 or $800, and they don't do it as some
or discounts.
Right.
Once they start discounting the 10, right, to get some numbers. I mean, that'll be interesting.
Yes.
It's interesting, Kevin. We were talking about the suppliers yesterday. I actually have the whole supply chain up. So they get 181 suppliers. They sell to 61 customers, and I went through a bunch of these yesterday, right? And it's really interesting because a lot of these stocks have got killed. These are a lot of these that we don't even know these stocks. Do you know what I mean? Because they're over in Taiwan.
181 of them. My goodness. Right. Yeah.
But some of them, you should see the amount of revenue they get from them is extraordinary. But then, when I was doing this, Tommy had said to me, well, you know what? They're bringing a lot of stuff in-house, too. So we don't know how much.
So, our point was, you're seeing the suppliers take a hit. And I said, well, you have Apple talking about that they're going to cut Samsung out of the picture at one point. So I'm sure, it doesn't necessarily translate to Apple necessarily. And it used to be if, because they were taking everything from suppliers.
Yeah.
But some of those suppliers might be hurt by Apple coming down the pipeline saying, you know what, we're just going to produce what you're producing, whether it's the screen, whether it's the tiny little chips in there. Whatever.
Apple might be the new Walmart and squeeze everyone.
It would make sense they want full control.
You know what? That's where it looks like a lot of their CapEx is going.
Yeah.
Exactly what Tommy said. The screens are the ones that pop out, and then their own chips. Even if Intel helps them make those chips and still has a relationship with them, it's still those chips that they want to bring more or closer in-house.
It would make sense too, right? Because that's the biggest fear. If I was sitting in an Apple boardroom, if I would say, man, we're reliant on these suppliers, and meanwhile they're almost our direct competitors in many cases. So
exactly. I agree, Tommy, and I think that's what now. The good news is Apple will have control of that supply chain.
Yes.
The bad news is they may lose out on some of the R&D.
Yeah.
Right, and competition for the best product out there.
Right.
So that's the other side of that argument. But it appears like one of Apple's game plans is to bring things in-house for sure.
One of the stories I heard was how hard it would be for them to catch up with Samsung, a company, and
Samsung's
I found that remarkable.
Company.
It's like you can have a $250 billion on hand, and you just can't spend money. Like it takes time, it takes years, and when they eventually catch up with those screens of Samsung might be on the next screen, just like you're talking about, Kevin, cutting edge, where it's like, can they be at the forefront?
Well,
but they're going to try.
This is a great point because what you find, I would say that once you really start getting successful, right? Most times you have the money, you don't have the time to do it.
Right.
That's
well, you're competing with successful people with money too.
Right. Exactly. Yeah. Folks, right here, 45 minutes from now, of course, they're going to be talking the market. They're going to be talking Fed at 2 o'clock. Look forward to the program, Kevin. Thanks so much, man.
Thanks for having me on, guys.
Thanks,
Have a great one. Have a safe one. Stay right there, folks. Tommy and I are coming right back. We get the Dow on 52. Nasdaq's up 20. S&Ps are off 4.5. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now down 57. Nasdaq is up 17. S&Ps are down 4.5. And when we were talking about with Kevin, Apple is saving the day here. So if you go inside the Dow, what you're going to see, we're down 57. But yet Apple is putting, I think, 50 positive points.
And it's rising as we speak. It's up 731 now. I think it was up $5.70 when we started talking to Kevin.
And then if we go inside the NDX, what you're going to see, Apple's leader, 4.3%.
Oh, definitely. I mean, quite a powerhouse number in terms of the market cap of a company like that to pop 5% overnight. Pretty remarkable.
And so you're coming in. Yeah, that swing point up there. We'll see how it shakes out. The swing is 178.82.
That's interesting because we spiked too overnight. Can I just jump back to, because right when those numbers hit, do we still have it?
Yeah, we hit the 178
on the dot, right on the numbers.
Right.
So we're coming up to that level, and this is a delayed. We're seeing 176.37 there. To jump back. Yeah. No, I guess it's right where it is. But, you know, we're approaching that 178 and correlates to where you were looking at.
Totally. It's Wednesday.
It is Wednesday.
It's oil day, folks.
It's a lot of things today,
It is a lot of
We got earnings, we got Fed, but we got oil coming up in, what time is it right now? 10:20. So we got about 10 minutes till those numbers come out. Let's jump over to the Nadex platform. So here's our crude oil contract. We're looking at the June futures contract, currently trading 67.27.
Okay.
So it's literally 10:20 on the dot. EIA numbers come out every Wednesday for the inventories, 10:30 Eastern time. So we have about 10 minutes until those numbers come out. And let's take a look. We like to set up potential volatility trades, right? We're going to be looking at buying potentially a bullish spread, selling the bearish spread, and looking for volatility in either direction. So here are our crude oil spreads. We've got a bunch of different time slots we can choose from. start things off, let's look at the 11 a.m.s. Now, I say 11, they go 9 till 11, they expire right at 11 a.m. So that would give us about 40 minutes from now, 30 minutes after the numbers come out.
Okay. Oh, we got a good one there.
Yeah, so yeah, exact, 67.25. So what we like to look for here is, when you're trading straight volatility, it's nice not to be paying for intrinsic value, paying for any actual value. You're just paying for a premium, because the value is where you start to have to put up greater amounts for your initial investment. So at 67.25, this would be our bullish spread. Now, what's nice here is we're within 4 pennies of where the spread begins. So right now, it would have about 4 pennies of intrinsic value, being the 67.29, 4 pennies above 67.25. You'd be buying that spread. It's costing you $23. And then on the flip side, you would be selling the one that goes from 67.25 down $1.50 to 65.75. Now this one's going to be about 3 to 4 pennies out of the money, so it's probably going to be $3 or $4 cheaper, which it is exactly.
Look at that.
So what are we looking at? $42 combined. Yep. Okay, $42 combined, which is going to represent 42 cents away from 67.25 in either direction, becomes our break even. So give or take, we're just going to round it up to 50, but that would put us in a profitable position. But, you know, to the bullish side, you'd be looking 67.75, and to the bearish side, you're looking 66.75, right? Those would become your points where you'd start to gain profit. Now, those are the 11 a.m.s. Well, it's nice to jump around. We're going to jump right to the noons. Now, same exact price points.
Which is great, yeah.
The only thing changing is time. So we have the identical spread to the bullish side, 67.25. You have $1.50 to the upside. This time, though, instead of 11 a.m., here's our 11, you're going to have until noon. So what is the cost of that extra hour here, right? Well, it's going to be about $2 on this side. Is that right? I just want to see what that is. See, it's oscillating a bit. So yeah, $4 a bit as this moves around, because actually right now it's to the penny. 67.25 it's trading at.
Sweet.
So no intrinsic value on either contract. You're paying 25 on this side. Well, guess what? I know it's going to be 25 on this side, because they're identical contracts with no intrinsic value, and as it ticks, 24. Okay.
Perfect.
So that's costing us about $50.
Yep.
So it's 42 on the first one,
make it
right?
50, right?
50 on the second one, and then we like to explore our options. I was jumping around already. Right. Yeah, so if you look at the 230s, now these do vary a little bit, and they turn into $3 spreads versus $1.50. But they're gonna change on price a little bit. We're gonna have 67.50 is gonna be our choice here to use as a pivot point. So you'd have 67.50 up to 70.50, and then you'd have 67.50 down to 64.50. Now the difference here is that on your bearish spread, you're going to have 25 cents of value, 20 cents of intrinsic value. So this is going to become more expensive, because you have to pay for all that value. So your bearish spread alone is almost costing you $50.
Yeah.
And then your bullish one's going to be completely out of the money, and it's going to cost you 22. So, you know, if you might be a little bearish, that might be nice.
Yeah.
Because, you know, you only have to make up the cost of your bullish
bullish. You get 2.5
spread.
hours at 66 cents.
Wait, these are 230s. What do you?
2.5 extra hours than noon.
Yes,
That's what I'm saying.
yeah.
Right.
Yeah. Now, but it really changes, though, in terms of the intrinsic value, where it takes on a bearish tone.
Right, and then actually, what you just said, that on the 11 or 12, you don't have to be bullish or bearish. It's a volatility trade. It's flat out.
It really is. You know, we're trading at 67.26. We're within 1 penny. So let's just go back. You know, if we're looking for straight volatility, the trade would be either the 11 or the 12.
Right.
Because there's no intrinsic value there. So, you know, you're trading literally within a penny of where those floors and pivot points begin. So you'd have $42 about for the 11 a.m.s. You'd have $50 for the noons. And you'd have, you know, we have 6 minutes until that news breaks. And, man, we've had some volatility on oil, especially in these Wednesday sessions that we've been looking at. We've gotten $1, $1.50 in action, two-way action as the market breaks. So we'll see what happens. And
last night, you know, they had a build. The API had a build last night inside the crude. But then the distilled went down 4 million barrels.
Okay.
So I think that the distilled, you know, bottom line, you know, seemed to save the oil market last night.
So
it stayed flat.
So, I mean, some serious volatility. This is just yesterday on the chart. There is the 430 API number. Yeah. So a little bit of a bar. You can't even see it, though. Not too much volatility as to what came in compared to how this day had been reacting. Almost up at $69 early Tuesday, in terms of then quite a day to the downside, below $67, and then back up slightly, $67.25 as we speak on the dot. So those are nice when those line up, where you're paying for no intrinsic value. So again, to look at, let's just set up that 12 as it's right on the dot. So the 12 o'clock, here's your bullish one again. You're buying at 25, you're selling that one, so $49, $50 for that noon trade. And 5 minutes until the news, and that would give you a full about an hour and a half from where we are right now.
Cool.
Yeah. we'll see what happens.
Yep. So back to the market out here. We got the Dow down 80, Nasdaq up 13, S&P's down 6.
How about Snapchat? Can we jump over? Because they had numbers as well.
They were getting smoked last night.
They wish they were living the life of Apple this morning, because that is not so much the case.
Yep, there you go.
I mean, big numbers when you're talking about a $14 stock. Down 19%, 18%.
And I believe this is blowing out the bottom. At a high volume low, 1128. Yeah. It got 1096. We'll see. You know, that's these. So that's a weekly I got there. That's let me put this on a daily. So how far I got to go back? Let's see.
Yeah, and that last big bar in February, that's going to be their previous earnings when they surprised to the upside.
Yeah. So.
And everybody said, oh, yeah, they have hope.
See. This is going to be a problem for Snapchat again, because it's going into, it had a high volume low at this with $11.28, 84 million. We've already done 60. That's a problem.
Sure.
You know, if it gets out of here, you know, God bless them, but it will be back.
Can you go into the description? What's the market cap on that company at these prices? 14 billion. Okay.
14 billion.
I see that as somewhat almost low. I mean, Snapchat is a worldwide phenomenon, right? Everybody knows its name.
Yeah, and they're taking in 1.2 billion.
I mean, when you start to put a number on that, you know, how low can it really get in terms of being such a driving force? I mean, it's still to be around. It's not going to disappear tomorrow.
No. Stay right there, folks. We're going to be coming back with the oil numbers. Dow right now down 72, Nasdaq up 15, S&P's off 5.5.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, what do we have here?
We have crude oil inventories rising 6.22 million barrels, and the expectation was only a rise of 2.2. That's the Bloomberg user, but that's usually pretty close to in line. It's an important number nonetheless. So inventory rise is 6.22. Let's jump back and see. I'm expecting maybe a decline with those types of numbers. Where are we at? Yeah, a little bit of a decline. So 67.14. Let's see how low we spiked. We'll zoom in a bit. So it would make sense.
It didn't even move.
No,
oh
and
my
that's
God.
So we moved almost. I mean, 25 cents in the span of 3 pennies. Yeah, 3 cents.
For a build like that, that's pretty amazing.
I agree. And the expectation, at least to Bloomberg users, was a rise of about 2.2. You got a rise of 6 plus. So price declining a bit. And like we talk about, we're only a minute into that news.
Right.
And let's jump back and see as those numbers continue to feed in. So still analysis going on. I just wanted to see what they were talking about as we lead into that. Yeah, so those are the top line numbers. Gas inventory, there we go. There's the big one we like to see. So the median estimate was even lower than the Bloomberg estimate. So median estimate was barely over 1 million barrels. Comes in at 6.2 for crude.
Yeah.
You had gasoline, was supposed to be an estimate of a decline of 500,000. Comes in a rise of 1.1 million barrels.
Yeah.
You got distillates, decline of almost 4 million barrels. Estimate was a decline of only 1.5. Man, so numbers missing all over the place. Fuel demand falling 1.29% over the past 4 weeks. Big numbers.
So let's go back to that again for a second. I just want to see where this is at again.
Sure.
Because with a build that dramatic, and right now we're still only off 25 cents.
Yeah.
This is when it's nice that, you have, well, you can do the 11 or the 12. But fundamentally, it's like you think this thing will be really down. So if it's not, if you give this some time, it's like, okay,
And we very regularly see on these. I mean, there's so many numbers contained in this EIA report that normally what's happening here is that there's a lot of bright people with a lot of money behind them trying to fight through every detail in terms of the demand they're talking about in here. Different regions of the country and what they're using and how that's playing into the estimates. One thing to note on the crude oil build, 4.88 million of it was in the West Coast. So that's exactly what I'm talking about. Well, guess what? Without that, there's no surprise.
Yeah.
And then they're figuring out, okay, how is that West Coast build going to factor into the market in the coming months? So just the point being, right, we see it in 15, 20 minutes sometimes. You'll just see a 5-minute bar just explode in one direction or the other.
And more than likely, that was our man Jim taking it by storm out in Minneapolis.
Okay,
it was so cold out there.
Sure, totally. And as we speak, so it's trading lower, approaching that 67. So we'll check back in on it.
So
only 10:33.
On the noon ones, 66.75, you're in the money, 50 cents.
Yeah, we needed about 50 cents of movement away from 67.25, right, which was going to be our pivots going bullish or bearish. So you needed about 50 cents of movement from that price point. So far, we're about 15 to 22 cents below that price level currently. So we'll check back in.
Cool.
Yeah. Always nice when you're trading volatility, though, and you get a miss like that.
Yes.
It's at least in your corner.
You're going to have action.
I mean, it's better than if it comes right in line, because when you're trading volatility, you want to see action, you want to see a miss, for sure.
You do. So let's go into the Dow and see what we have happening inside here. So we know that Apple's putting juice into it. You got Apple putting 51 positive points, Chevron putting 7, Caterpillar putting 5, Travelers Insurance, that's minus 22. It's not bad. United Health minus 22, Boeing 14, IBM 8. It's kind of spread. It's nothing really heavy.
They're nothing, and they're all high-priced stocks. Even Travelers, $127 stock. That's barely down, approaching 2%. I mean, UNH, $233 stock, down barely over 1%. I mean, BA, Boeing, we know, $327.
And watch this. I was looking at this yesterday. So this is this is dramatic. Now, these are all the defense contractors.
Sure. No, I remember.
Wait to see this. You got General Dynamics, folks, on the, let's see, 1, 2, 3, 4. This is 7 trading days.
Yeah. 7
trading days from 229. We're at 199. And it got as low yesterday as 194. Northrop Grumman, NOC.
I forget, were you talking to Kevin about these? I remember that when you guys were having this, somebody was having this discussion.
I was on TD Ameritrade Network.
And then I think you guys brought the conversation here, too, because I remember being pretty, remarkable moves to the downside on all of them.
At 359, hit a low yesterday of 302. That's 15%.
Huge.
And then Raytheon just started moving downtown again. That went from 229, hit a low yesterday of 197. It's still that this out of the other stocks have already hit the February 9th. Well, it's February 5th swing low, 191. Now Boeing, this is what happened with Boeing yesterday. Boeing looks to me it wants to go down there, but this is subtle. See, Boeing had the prior day, well, let's say last week, it goes up on 5.2 million, has that little high volume lows spike at 323, and yesterday you just had a small expansion of volume. It's like this thing, when you actually put this across, it's all the volume's still downtown. So it's like, hey, whatever's going on, they're either getting less contracts, either that or the TAF is actually going to hit them.
Sure.
I mean, they extended all those TAFs, but all those companies sell big arms to a lot of countries.
Yes.
So we'll see where that shakes out.
Definitely.
Some of the higher volume stocks out here. Let's go take a look at what do we got. Let's see. So
Snapchat.
Yeah, Snapchat.
Easy enough to get shares when you're at $11 stock, too, is what happens.
Seriously.
Right? That's why you always see, what is it, AMD always up there, because it's such a low-price stock. Yeah, AMD, it's like number 12, $11 stocks.
Oh, and did you see this yesterday? I don't think, this happened, Match, M-A-T.
Yes.
This is intense, folks.
Yeah.
Facebook.
Don't get in Facebook's crosshairs.
Oh, my God. If you want to see something devastating, that was intraday, folks, at 2 o'clock in the afternoon, I believe it came out. I'll pull it up.
Yeah.
But it went...
Zuckerberg was speaking at a conference.
Yes. And so Match.com went from $47 to $35. And where do you see this? It's really unusual when this happens intraday. Normally the stocks gap like this, but there it is right there at, what time is that?
120.
120. And IAC... Which
is that another one?
Yeah, what happens is this, IAC Interactive.
Okay.
That used to be part of IAC Interactive, and then they spun Match.com off.
Okay.
So IAC, watch this.
Go ahead.
I will. That went from $161 to $131.
Yeah.
And watch why. This is why. They're not even in this business, but half of their market cap has to do with owning. I got to pull up Match, rather. Match. It's the amount of shares that they owned in Match. That's what killed IAC.
Okay.
Description. This is like crazy.
Sure. They spun it off, and the majority of that company is ownership in Match.
Exactly.
THDC, one more time.
Okay. 14 million shares.
There you go.
14 million shares.
22% of the company, for sure.
Imagine that.
Yeah. And can we go into IAC to see what else they do own? They might have other sites, right?
Oh, yeah, they're monsters.
Right, that's it. Because they're going to be affected beyond Match, I think, is what...
Yeah.
So...
Look at them all. We'll go through them as soon as we come back.
Yeah.
About.com, The Daily Beast...
Yeah.
Home Advisor.
Right. So it is, but Match, dating site Match, that's the big...
Stay right there, folks. Tommy and I come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow Industrials right now down 55. Nasdaq is up 8. S&Ps are off 5. And as we're looking at this IAC,
yeah, so this is interesting.
A match actually. Well, we're looking at both of them, right?
This is IAC though,
okay.
And that's what. So I was trying to see who owns all the other sites, and it's Match that owns the other sites. I say other sites. I'm talking about. I knew there were multiple dating sites where it was OkCupid, Plenty of Fish, Tinder, Meetic, 2, Our Time, Black People Meet, Friend Scout 24. So I wanted to see, like, did they just, no, they spun them all off into one big dating company that's Match. So that would make sense. And then this provides that Match, at least in 2015, was 32% of IAC's total revenue. They have applications, Home Advisor, video, and a variety of things. But so Match is the one that contains all of those sites. And so what's interesting is so this was the article talking about it. So yeah, so they're going to be launching a dating feature, they being Facebook, where it's going to introduce you, will match, ironic word, will match users specifically with people they are not already friends with. Facebook users can build a dating profile which friends won't be able to see. So you're going to be able to kind of separate them. And both of them tanked about 22%. On that news.
Oh my God.
Yeah. The dating feature is likely to be a free service. Yeah, it's going to be free because then they're going to take all your information and they're going to sell it to Chinese hackers. They're going to be sending over dating profiles. No, I mean, that's, so.
Wow. And so, because those other services, they cost. Yeah, Match.com, Tinder, right?
Now, so Tinder doesn't, though. That's where, and I don't think OkCupid does. There's a lot of free dating services out there already as well, which would be interesting.
And they make money through advertising, right? Probably,
I assume so, and they have premium where you can like put your profile in front of everybody first or something. So then you can pay for it to kind of get your profile elevated or stuff like that. But most of the services are free.
Do you know how many people are just going to hit that if they're free into Facebook?
I don't know. It's not now. So I was trying to find where an executive from Match or maybe it was from IAC came out and of course had something to say, and they kind of were trolling Facebook, and we'll get the quote up here at some point, but it was interesting in that it was kind of like poking fun at, it's interesting that you'd roll this out now in light of all the privacy concerns that you have, and you know, kind of poking like, oh, you want everybody to open dating sites on your site now that like nobody trusts you. which is kind of a fair point in terms of, you know.
Well, I'm sure they know everything about everyone, so the matchups are going to be pretty wild, man.
They do. So it's interesting. I watched a show last night on Netflix called Black Mirror, right?
Yeah.
So it's kind of an extension of, I'm going to forget. So what it is it's every show is its own. So it's a series, but it's different actors, different plots, okay?
Right.
And so this one episode was about dating in the future. And it was about, the way it started was that you were assigned by a computer to this person, and you didn't know, and then it would tell you how long you're going to spend with the person.
Oh, I've seen that one.
You've seen that one? So
That's
it was
awesome.
like 12 hours for the first one, and then the next one was a year.
Folks,
it's like a year.
Yeah, this is a great
So I think it's called Hang the DJ is the episode.
Oh.
It's like season 4, episode 2, and I was just jumping around.
I saw that.
And so I'm not going to tell the end of it, I guess, because people may talk about it, but it was interesting, and it had to do with matching and computer technology of matching, and don't fill in the ending because you know as it goes. But it's a cool show, and it's I mean in light of what we're talking about,
and
man.
that's what makes Netflix so cool, man. You know, because that was something that I never thought that I'd actually see on.
Go ahead, don't worry.
On Netflix. Do you know what I mean? It's just that their programming is so different. So it's so creative.
I was looking for the Twilight Zone. That's what I was looking for.
Yeah, I love it.
That's what it was an extension of. And I think it aired originally on the BBC, maybe, and then Netflix commissioned it for 2 more seasons, season 4 and 5. But what I like about it most is that they're isolated episodes where, like, because I get into a show and I want to watch them all. Yeah. You know, so like there's no need. You don't get trapped in a good way of needing to watch all those programs.
Pretty wild.
It is. So let's jump back to oil real quick and take a peek at where we're trading at. So it's 10.47 right now, and we've been jumping around, but in light of that news, pretty remarkable. We're within about 5 pennies, call it even 2 pennies. We're right back up to almost our max loss right now if we had made that trade. Now, what's interesting, and we always see it, man, we're now above the price that we were at before those numbers. Yeah. You know, market expecting about an increase of a million barrels.
It's rocking now.
And this is what happens sometimes, and that's what we talk about, where, you know, we traded all the way down to 67, and we're only 17 minutes after the news, and man, we're getting a bid right now. We're trading higher. So keeping in mind, you have a lot of options choices that you can trade in and out of these positions prior to expiration. So let's say you were bullish. Let's say you weren't liking the action of the market. You know, as you said, just like you saying, man, it should be down more. What's going on here? Maybe you choose to close out your bearish trade as it's down, get some value back, look for the positive side. You know, the noons, which we tend to like just because we see this type of action where it's a delayed response sometimes. You know, so we'd still have an hour and 15 minutes. This is your bullish
spread. There's good action here.
There is. You know, you're getting price action in both directions. Market's trying to find where it's going to end up at equilibrium. And we'll see. So we'll check back in one more time throughout the hour.
And then on top of that, of course, we got... So what's intriguing about oil right now, too, if we go over and we just look at the dollar. So picture, you know, the dollar has gone up, you know, this is quite a run. You know, let's see. April 17th, we're at 88,990.
Big time, yeah.
We're at 92,510. The swing point up here is 93. It blew away this 92,020. Now, I expect, you know, when the Fed comes out, this thing's going to be basically rocking and rolling. We'll see which way it's going to go.
Gold as well, right?
Yeah. What's intriguing is if we go over to the oil market now, you can see how strong oil's been, even with the dollar going up.
Yeah.
You know, you're priced in dollars, and it hasn't affected it.
Yeah.
You know, I mean, this thing will not. You know, when you're looking at this, folks, this is a delayed quote. We're higher than this right now. But bottom line is that it's staying up with those numbers. So, so the market basically more than likely is putting some kind of premium in there. Just for the whole Mid East. I mean, that's what.
And look at that.
Look at
so
that.
I couldn't help but seeing the action. It's pretty remarkable, man. We got a number miss like that.
And what we're looking at, folks, is that it just went from 67.20 to 67.60.
60. Can't keep up with it, man.
Wait for a second, exactly.
Yeah, 67.60. So, you know, looking at it, this would have been our bullish spread. This would be where all the value is right now. Yeah. And right now we're looking at approximately $32, so still a loss in terms of that was going to be 50. Yeah. But same thing. Maybe you think that this bounce isn't warranted, okay? You could close out the bullish side and then look for over the next hour and 10 minutes. If it drops below 67.25, you start getting value to the negative side. And that's what's kind of nice is that you have a lot of choices, a lot of options of how to trade that. But man, it's like it's really amusing in the recent weeks the type of action. It seems like the first action after the news that's usually in line with the numbers doesn't even hold. It's like, you know, it's I don't know what the market was looking for, man, because what if we ever came into the other side? You know, we had 5 million more barrels than we thought we were going to have, and the price is now 30 cents above where it was trading, let alone if we had ever been under that number.
Pretty intense.
It is.
No doubt about it. The so let's see, Apple's holding pretty good. What's intriguing too is that, you know, Apple would be one of the first equities, you know, if this holds up, that actually is held coming out with good numbers. It seems like they keep selling.
I was just going to have to jump in. Do you remember what they said the expected move was going to be?
Yeah, 5.2%.
I think it was $6.80.
Yeah, that'd be 5%. I think 5.2%.
I think it was literally $6.80.
Isn't that wild? Yeah. And we're up 6.80 right now, folks. Exactly. Stay right there. Tommy and I come right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. So we have the Dow right now down 69, NASDAQ up 5, S&P's down 5.5. So Fed at 2 o'clock. Notes and bonds are hanging tough.
They're going to be hanging until 2 o'clock.
They're going to be hanging, man. And then you can expect some big action out here.
Even gold 1305 hanging as well. Man, that's been fighting around that.
Let's pull that baby up. GCM 8. Yeah, so thus far,
it's going to break that 1300, man. 2 o'clock, maybe give it the velocity. It's like it's been trying and trying.
Because it hasn't caught a bid at all. You know, the biggest bar is the downdraft from this morning, 307 to 304. Yep. I like how this is setting up here, though. We'll see. What has happened is that the 10-year, though, this is encouraging if you're if you think it's going to be like a dovish statement. The 10-year this morning has got some strength. Yep. Someone's buying this 10-year. Yep. I mean, that's a good size buy in there.
Yeah.
So
let's check back in on oil one more time as we approach the end of the hour. All right. So about 67.46. So quite an up thrust that we got all the way up to 67.66. This would be our bullish spread at noon. But again, that's why we tend to like those noons. It's our own market bias.
Right.
But, you know, we always see this volatility that comes in after the market news, especially on oil. You know, each one reacting differently. Tomorrow, natural gas, we get the 10:30 numbers, same exact deal. We haven't seen this type of action in natural gas recently.
We haven't.
But oil approaching $70, everything going on in the world. You get the Iran deal going on.
You know what you will get action on, folks, is that the 1 to 3 spreads this afternoon. Because 2 o'clock.
You're talking about index spreads.
Exactly.
With the Fed, hey, gold spreads,
right? And
everything.
Well, gold's going to be closed. 1:30 at close.
That's right, yes.
But the index spreads are out there. Stay right there, folks. We got swim lessons coming up next. And, of course, we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. What day is it? Wednesday.
Wednesday. Fed day, baby.
Fed day. Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.